Hey everyone, welcome in to another daily editorial here on the KE Report, chatting with Dave Erfle. We're going to be recapping what's going on in the precious metals and the underlying equities as we are seeing a bit of a pullback, especially today on China weakness, at least weakness in their stock market as everybody came back from Golden Week. Dave is the founder and editor of the Junior Miner Junky. Click the link in the show notes to visit his website. Dave, we are seeing a bit of a pullback today in a lot of different sectors, but especially the commodities and metals here. Gold down just over 1%. It's still above 2,600 at about 2,634. Silver's down over 4%, down to still above $30, but about 30.64. Copper's also down 2.5%. Crude's down. Look, it's weakness across the board for commodities and metals. The stocks are also fading, but you look at something like GDX. GDX is down less than 1%. SIL is down less than 1%. So they're at least holding in a little bit better today after a few days of weakness. But Dave, let's take this in a bigger picture sense here, where gold has been up 8 out of the last 9 weeks, except for the last couple weeks. It was riding the upper Bollinger Band for 3 months. So I think you could argue very much of a natural correction. And again, it hasn't even given up $100 from its recent highs. So Dave, how are you viewing this recent weakness? And let's stick to gold and gold stocks right now.
Well, to tell you the truth, Corey, it's kind of a relief to finally see a correction here. I mean, the parabolic run that gold was on, it looked like it was going to keep running till it got to about $3,000 an ounce. And if it did so without correcting, then the correction that would follow a move to $3,000 an ounce in this run would be really strong and it would last quite a while. So I'm kind of relieved to see a correction here. And I think that a big reason why some healthy profit taking finally started to ensue here was because this morning, I think Hezbollah group based out of Lebanon, they announced that they want to discuss a ceasefire with Israel. So I think the big reason why the gold price continue to hang up above 2650 and being extreme overbought at the same time was because of war fears in the Middle East spreading to the U.S. joining and maybe other countries joining into the fray over there. That was a big reason why the gold price had yet to correct, because we've had macroeconomic news where we had a strong jobs report that didn't correct the gold price much. And also the marketplace starting to price in just a 25 basis point coming up here in November, where a 50 basis point, another back-to-back 50 basis point cut was pretty much priced in a couple of weeks ago. So that had yet to take the gold price lower. So like I said, I'm relieved to see the gold price lower, and the reasons for the gold price going lower I'm also relieved to see, because nobody wants to see war escalate in the Middle East.
Yeah, Dave, and I think another factor pressuring the commodity sector is a higher dollar the last couple of weeks and also higher interest rates. Those are usually a counterbalance against the commodity sector and against the precious metals. But let's zone in on the gold stocks for a little bit. GDX has been pretty strong all year, ever since bottoming in late February, and then that move up the 1st of March to present. Had a pretty good run, higher highs, higher lows. It's staying mostly above the 50-day moving average. But when you look at GDX, and you look at a longer term chart, as exciting as this year has been, it's not that exciting when you look at it can't even get above the peak from 2020. And we've got record high margins in the gold stocks for Q3. We've got record high gold prices. A lot of investors have that bittersweet feeling of, yes, it's been in an uptrend, but it hasn't been as exciting as one would hope. How are you looking at GDX and the strength of the gold producers as we're getting close to reporting what should be the strongest quarter in years?
Yeah, well, based on the recent action in GDX and GDXJ, it's not really surprising to see some profit taking here. We had, I think it was a 13-14% move in 1 week in GDXJ, and I think it was about a 10 or 11% move in GDX the second week of September, and that move's being corrected and on falling volume. We all know the reasons why the gold stocks have been lagging the gold price. A big reason for that has been the ongoing purchasing of overvalued stocks and overvalued AI stocks and crypto, although it has shown signs of topping. The stock market continues to go higher. So there's been really no impetus for investors to come into this tiny little sector that is synonymous with a lot of risk, even though the gold price has broken out and risen to over $2,700 a couple of weeks ago. But we all keep expecting this to change on the back of strong earnings season, and we have another strong earnings season as you referred to coming up here. I think it'll kick off at the end of October 24th or 25th when Newmont announces their Q3 results, and they're expected to show margins of over $1,000 an ounce, and they should have a really strong quarter. I think their all-in sustaining costs are around $1,450, something like that, and the gold price averaged $2,500 an ounce in Q3. So we'll see if the third quarter in a row of these outsized gains in these miners will finally attract some attention of generalists.
Dave, when we look back at this year, though, in terms of, let's say, GDX, let's just look at that chart. GDX from the start of the year, which in all fairness really dropped after the start of the year, still up about 25%. You go back to the low of the year, right when we turn the corner into March, GDX is about 50% higher. So it's performed fairly well, but it has been on a kind of decreasing volume in the second half of that move. And look, I think a lot of people remember the recent runs over the last decade that seemed to only last a few months. At least to me, this move seems a bit more sustainable in the sense that it's just taking a staircase higher. It consistently comes back and retests uptrend lines and puts in a higher low, then a higher high. How are you comparing this move that we've seen in GDX ever since March when it really started to move higher compared to some of the other, let's call them bull markets over the last decade?
Yeah, I mean, if you zero in closer to where the GDX broke out, when the gold price broke out above 2,100, both GDX and GDXJ from that $2,100 move in the gold price to $2,700, right? As you mentioned, GDX and GDXJ, they rose about 50-60%. And while the gold price rose about 30%. So that's 2 times leverage. So they're basically doing their job in creating leverage for investors as opposed to investing in the gold price. But if you zoom out a little farther and you take a look at the GDX and the HUI in relation to where they were in 2011, I think they still need to almost double to get there. So that's a big reason why most people have been frustrated with the mining stocks, because they haven't provided the leverage they provided in the past. And a big reason for that is because while the gold price was going sideways, we had inflation eating away margins for these gold miners. And also we had the stock market, especially the AI sector and the crypto sector, taking the sizzle out of gold stocks. And the generalists just have not come back into this sector after leaving 12 years ago. So now we're relegated to being a stock picker's market. So if you pick some of these stocks well over the past couple years, you've done well in several of them, but there's also many more that have yet to play catch up. And I think that they're setting up to play catch up by creating these strong bases, just waiting for the generalists to come in and provide that sizzle that we've been lacking for the past 12 years.
Yeah, very well stated, Dave. And I think that when you're looking at these indexes like the GDX and GDXJ, keep in mind these are the biggest companies in the sector that usually move first, and they haven't even gotten anywhere close to their all-time highs from 2011. So when you get down into the universe of the juniors, it's even worse because there's a lot of them haven't even got off the mat yet. So I think it has been a stock picker's market. You've had to have been selective, and it's really the best of the best that have been getting rewarded, and the rest have kind of been left behind. So hopefully we see that rising tide lift all boats soon. But let's shift over to silver and the silver stocks, because that's the more speculative side of the sector. That's really where the animal spirits either completely leave and hide, or they come in droves. And we saw a nice run in silver, up over $32. Pretty nice run in the silver stocks and the ETFs. How are you looking at that side of the sector, Dave?
Yeah, the silver price, interesting, right? 32.50 is obviously really strong critical resistance. It keeps running up there, even intraday, intra-week. The silver price has moved to $33 a couple times, but it can't get that weekly close above 32. And it's consolidating between 30 and 32, 33 for the past several weeks. And also, if you take a look at the SILJ and SIL ETFs, they've been outperforming both the GDX and the GDXJ during this correction, although silver and the gold stocks continue to show relative weakness to the gold price. So that's kind of interesting. And as you know, last week we saw a high profile proposed takeover announcement of Coeur taking out SilverCrest. And that provided a lot of pop for several of the Mexican juniors, because we had at the beginning of the week on last Tuesday, we had Claudia Sheinbaum's administration take over from AMLO, who was more of a dictator type, unpredictable president. So she's more business friendly and pragmatic. So before she took over, we had First Majestic take over Gatos Silver in Mexico. And now when we had another major miner come in and take over a proposed takeover of SilverCrest, that's showing that the majors are having more confidence in Mexico. And also, Claudia put out this manifesto, this 100 steps for transformation in Mexico. It was introduced to me at the Beaver Creek show when Discovery Silver announced it in their presentation, and they sent me a link to it. And number 87 specifically talked about open pit mining. And she announced that she's not going to be giving out any more open pit concessions. But if you've already got a concession, and most of these mining companies that are de-risking these open pit projects, they already have mining concessions. So they'll be taken on a case-by-case basis. So it's becoming more apparent that Claudia is going to be more business-friendly and more mining-friendly as opposed to AMLO.
Well, it's what the sector needs. That's what every metal needs, right? We'll see how that filters through the system. But filtering back to that SilverCrest deal, it's $1.7 billion US. SilverCrest, it really seemed like was the standout of the silver space, continuing to produce at some nice margins, building up cash reserves. The company was in no need of money, and it was really just coasting there. What does this mean for the silver space then, Dave? What else is left on the table for what is a small sector with a limited number of suitors?
Yeah, there's not many left now. What, you've got Aya in Morocco and Mag Silver in Mexico. Those are two jewels that would be, I think, very attractive to majors or mid-tiers taking over. And it would be nice for a major or a mid-tier to make a competitive bid on SilverCrest, but I don't see that happening because the total break fee is $160 million. So anybody who would come along and try to make a better offer for SilverCrest, they're going to have to add that break fee of $160 million. So it's more than likely that the core SilverCrest deal will go through, but it is good for the sector. And like I said, a lot of these mining junior miners that are de-risking projects in Mexico, having these huge moves on Friday when it was announced, and it was with huge volume. Also, a lot of these companies had these moves. So I think the shorts are getting nervous. You know, they've done really well on shorting these juniors that are de-risking not just open pit projects but underground projects in Mexico. Some of these underground projects want to shift to open pit in the future, so they're still getting pressured by the politics there. So I think shorts are getting nervous, and mining companies are getting more friendly to Mexico because of the new administration that's going to take over. That has taken over, the Claudia Sheinbaum administration that has taken over. But on a side note, I mean, once she's now taken over, it's going to take between 6 to 9 months to get these mining situations in place before these permits are issued. So I wouldn't expect any permits to be issued at least within the next six months, because you had AMLO who hadn't issued a mining permit in 18 months. So it'd probably be another 6 months before a mining permit is issued, but still it's probably going to happen, but you just have to be patient. And who knows when the sector will start to figure out, hey, these permits are going to start to be issued, because it's obvious that she's more mining friendly, she's more business friendly, she sees the budget, she knows that mining is a big part of the Mexican economy and all the jobs and the tax that is going to come into the treasury because of these projects. So you just have to be more patient on some of these companies that are waiting for their permits.
Yeah, Dave, and I think when the first permit drops, it's going to be good news for the whole sector. But just to follow up on this takeover deal, because I think it's interesting from the standpoint of these were both Gato Silver being taken over by First Majestic and SilverCrest being taken over by Coeur Mining, were both large single assets, high margin projects and mines. And like we said, there's only two left, really, Mag Silver and Aya. I often thought it would have been cool if Mag Silver and SilverCrest would have combined to have two world-class mines in the same company, but it looks like the big companies are going to piecemeal this out and each have one of these cornerstone assets when it's done. What does that mean for the rest of the silver producers? Because a lot of the rest of the batch that you have are companies that have 2, 3, 4 smaller mines that are higher cost. They've got nice torque to rising prices, but they're not the kind of projects that majors want to buy. Should some of them consolidate into larger companies? Are they just going to kind of exist on their own? What do investors that want to get positioned in silver stocks actually do? Because the rest of the big players have more exposure to gold than they even have to silver. So how does one even play the silver market now?
Yeah, I mean, more consolidation is needed, and we've needed more consolidation for quite a long time. I mean, that's my criteria when I'm looking at these silver companies, right? The first thing I do is I put on my CEO hat, right? If I was a CEO of a mid-tier or a major, would this company look interesting to me because of what they're de-risking or the mines that they already have in operation? And if they're small and if they've been kicked around from a bunch of juniors previously, I'm probably not going to invest in them because I'm looking for something that a major's looking to eventually take over. And that's when what you want to try to get in early on. So these companies that are producing silver or gold from these small mines with small land packages and that don't really have much upside, don't really have much blue sky potential, I'm not really interested in them.
Dave, are there any synergies with these small silver miners with multiple mines joining forces? Would they even save any costs? Would that bring down their costs? Would it make them less risky? Or does that just create, again, a consolidated company of marginal mines?
Yeah, I mean, you have to look at it at a case by case basis, right? I mean, if they have a lot of cash and they have access to cash and it looks like there's blue sky potential and they're still building out these mines, they're trying to grow them with more exploration on the property, then I'd say yes. But I mean, there's a lot of these companies that have been around for a long time and they really haven't gone anywhere. Their stock prices haven't really gone anywhere because of that. Investors are getting a lot more savvy in this sector. And I've said this before, and I don't like to call investor dumb money, but I mean, we've all been dumb money at a certain point in our investing lives. I certainly was dumb money when I first got into this sector. With the lack of dumb money in this sector to bail out your mistakes, if you get into something too soon, or if you get into something that you think is a takeover target, but it's not, dumb money's not going to come in and bail you out right now. That I expect that to be at some point in the future, but right now it's just best to concentrate on these quality projects that look like they're takeover targets for a mid-tier or a major. I mean, as I said before, I mean, I don't really want to mess around with companies with small mines and that don't really have the big land packages associated with their small operations.
Well, Dave, just I guess one more on this as far as the developers that are coming up that have those large projects, have those large land positions, because of the still tenuous nature of investors with Mexico and not knowing, case by case means some may get it, some may not. Do you think a premium will be paid for North American development assets? Because there are assets in Idaho, there are assets in Nevada, there are assets in British Columbia, there's assets in South America, and there's some in Australia that are not in that Mexico penalty box. Do you think those will get a premium to Mexican projects, or when a permit's issued in Mexico, will it level the tide?
Well, I think they already have. I mean, a lot of the Mexican permitting risk is already priced in to most of these stocks that were punished because of it. I mean, you saw a nice pop coming out of the Beaver Creek conference because of what I touched upon earlier about Claudia coming into power and that manifesto being bandied about at the conference. And then last week we had another pop because of what we discussed earlier. So I think a lot of the permitting risk is out of these Mexican silver juniors. But yeah, I mean, you've seen a premium on a lot of these other companies that do not operate in Mexico, but therein lies the opportunity, right? Are you going to chase something that's already gone up, 3 or 4 or 5 times from their major lows, and they're starting to really bifurcate from the sector and look like major takeover candidates? But hey, you kind of missed the boat because there might be two times upside if you're lucky. I mean, my criteria before I invest in any of these juniors is I got to see at least 3 times upside. And I know there's some of them that I'm holding that at least 3 times upside has been cut down to possibly a double because of the dilution and the de-risking, right? I mean, that's the fine line right here that you're talking about. And when you invest in a junior, it's that difference between de-risking and dilution. Have they diluted at the right price to lower their upside risk? I mean, if all it takes is just one mismanagement of capital markets on a project, I don't care how good it is, and we've seen it on several, that it's blown out the share structure, and all of a sudden your leverage in the stock, where you thought it was 3 times leverage when you got into it, it's at least 3 times. I mean, like I said, it's got to be at least 3 times. I want it to be 3 to 10 times leverage before I get into something, but at the least 3 times. So now a lot of these companies that have blown out their share structure because they mismanaged capital markets once or maybe even twice, their leverage is shot. Their project is still fantastic, but their share structure is blown, and some of them have a lot of warrants out also, which caps the price going up. So you just got to be very careful before you get into these things, and after you get into them, also you have to look at, is there upside left, and is there enough upside left to garner me still holding this stock and waiting for the generalist to come in and save me to get at least my money back out of my position.
Well, it all comes down to time frame too, right? Because the
Right.
stocks that are getting taken over now are the more developed ones, and that takes time to develop. So you want 3 times upside, that might take 4 or 5 years. You want 2 times upside, maybe those takeovers will happen in a shorter time period. But I see what you're saying there, Dave. Look, it's continued to be a market of the haves and the have-nots, and it can be hard to chase stocks higher, but that has been the right strategy, at least in this recent market. But hey, we're all still just waiting for that catch up of all the juniors out there, which there still are a lot of them, to start to get the same money that the outperformers have and continue to advance their projects. It just has taken a lot of time, and it looks like it will continue to still take time until we see some of this M&A come down into the smaller stocks. But Dave, it's always great chatting with you again. Dave Erfle, founder and editor of the Junior Miner Junky. Click the link in the show notes to learn more about his service. Dave, great chatting with you. We'll chat again next week.
Thanks again, guys. Always great talking to you.